Hello, everyone. Welcome to the Small Business Edge webcast. Today's episode is sponsored by Wheeler Financial, a division of Pitney Bowes. I'm Brian Moran, CEO of Small Business Edge. Today, I have the pleasure of having Karen Kerrigan, the president and CEO of the Small Business and Entrepreneurship Council, on our program. Karen, welcome to our webcast.
Oh, it's great to be here, Brian. Always a pleasure to see you and an honor to be a part of this webcast today.
Well, Karen, you and I have been friends for a long time, and I have to tell you, before we get into our topic for today, which is going to be expiring regulations and kind of the state of small business in the last 2 months of the year, people should know, our listeners, our viewers, what a true champion you have been for a long time for small business owners around the country. The work that you and the SBE Council do on our behalf, especially through the pandemic and the stimulus and crowdfunding and all these other programs. I mean, I feel like we got the heavyweight champion of the world, in our corner fighting with us. So thank you on behalf of all the small business owners around the country, thank you for what you do.
Well, thank you, Brian. That's an honor as well, representing the small businesses and entrepreneurs out there. And just like many of them, we have had to pivot continuously. Pivot
Right.
is the word of 2020, right? We have had to pivot continuously at what we do
Yeah.
in order to best represent small businesses and to advance, some of the policies and initiatives and programs and support that they need during this critical period of time.
Yeah, it hasn't really been a straight path, huh? 2020.
No, what's next, right?
Right.
More to come for sure.
Right. As bad as today may be, tomorrow could be worse. No, I'm kidding.
Of course you are.
But we are. So here we are now. We're in the last 2 months of the year. No, for those viewers watching today, we're recording this before the presidential election. So it's important to note that, because a lot of what we're going to talk about today depends on who's going to be running the White House and government in 2021 and beyond.
Mm-hmm.
And so I want to talk about that. So let's get into some of the expiring regulations. And for the business owners watching that don't really understand how this works, this happens every year, right? At the end of the year, we have these expiring regulations. And in the 11th hour and 59th minute, Congress will extend them, right? I mean, this has been going on for years, right?
Well, it has largely regarding tax credits and tax-related items, where
Right.
you have these credits that have been extended for a year or 2 years, and Congress comes back, then they extend them again, or they may not extend them until the beginning of the next year and make them retroactive.
Right.
But we're talking about a different game here now, in that we're talking largely about things that have been passed as part of the CARES Act and the previous stimulus slash support package related to COVID-19, things that were included in those pieces of legislation specifically aimed at small business.
Right. And that is the biggest struggle. I mean, you and I talk to hundreds, if not thousands, of business owners every month in various, whether it's podcasts or we go visit them, or we're on radio shows, and there's so much confusion right now. Let's get into it. Like the PPP, right? The PPP loan program and the deadlines that there were for applying for loan forgiveness. Give us kind of where we are right now in that program and what business owners should be doing as we get ready for the end of the year.
Well, as you know, with PPP, there's been regular guidance that's been put out, by the SBA. They've had to do that a few times because the program has been reformed and modified.
Right.
We're hoping that they'll do it again and unleash about $138 billion of capital that's sort of sitting in idle in Washington. But nonetheless, we are in the forgiveness process now for many small businesses. And there was concerns when they looked at the application. There was this little date that was up in the corner of the application that said October 31st, 2020.
Right.
So there was this massive concern in the small business community that was the date that they had to apply for forgiveness by. And that was not the case. That was just the date of the form, that the
Right.
SBA put together. So,
Right.
we are in the forgiveness process right now. It is open. There's, sort of an easy forgiveness for loans under $50,000. But essentially, you can submit a loan forgiveness application anytime before the maturity date of the loan, which is either 2 or 5 years, depending upon from loan origination, depending upon if you took that PPP loan out during the first reiteration or the second reiteration.
Right.
But if a borrower does not apply for loan forgiveness within the 10 months after the last day that the borrower's of that forgiveness period,
Mhm.
the loan payments are no longer deferred, and the borrower has to start paying on that loan immediately. So the incentive is to get this loan forgiveness application in.
Right. And for the majority of small business owners who borrowed less than $50,000, there's kind of almost like an incentive for them to, as you mentioned earlier in October, the SBA and Treasury came up with a kind of an expedited process of getting those loans forgiven.
Right.
So it's an easy application. The biggest mistake you can make is not filing that to try and get that loan forgiven. And then obviously for those who have loans larger than $50,000, there's still the opportunity to get some or all of that loan forgiven, but you have to get your application in, and you have to start that process.
And I think most small businesses want to get this done because they want that certainty that they know that, there is their forgiveness, and that this is not something that's going to be debt that they're going to have to carry, in their business and would impact them in a bad way. So, but the problem was, again, there was uncertainty in terms of the application. There was uncertainty in terms of whether the banks are going to be held liable for something, but the bottom line, 50,000 and under, Brian, you can essentially, you basically, what is forgivable, you keep that paperwork, you certify, that this is correct, you give it to the bank, and forgiveness should be granted pretty quickly. That doesn't mean that the SBA may not audit, your application and your loan, because they want the opportunity to do that to all loans.
Sure.
But hopefully this will be a smooth, easy process for most small businesses, because the bulk of the loans are small size loans.
Right. And I had in a separate conversation I had with our mutual friend, Barbara Weltman, who's a top tax expert. There was a question about using the expenses as tax deductions, right? So there was it's a separate measure, and I don't believe it's been ruled on yet, right? You can't include, as of now, you can't include the expenses of mortgage or utility payments or wages as deductions on your taxes, right? If you got PPP.
That's right. The IRS ruled in that way that, whatever's forgivable is not deductible. Okay. Right. But Congress has said, both Democrats and Republicans, that was not their intent at all. Actually, It is in the legislation that cannot move forward. But there is efforts in the Congress right now. And again, this is something that has bipartisan consensus to make it clear that those expenses will remain deductible, and it won't in effect be a tax increase for many small businesses.
Right.
So Brian, but this is, so this is the frustration that SBE Council has as an organization. There's so many things that both Republicans and Democrats agree upon when it comes to PPP, when it comes to small business support, this being one of them. And why can't we just do this as a standalone measure so that small businesses have certainty, number one, and number two, if we reopen PPP and get a second draw so that there is access to more capital for those small businesses who need it.
Right. And I have four other things I want to talk to you about,
Yes.
but this is so critical for small business owners right now at the end of this year. And I definitely recommend everybody who's listening to this webcast to listen to the podcast that I did with Barbara Weltman about taxes, because a lot of this is going to be, contingent on whether or not you purchase a piece of equipment for your business and use that tax deduction 100% this year, or do you spread it out over several years? Well, you're not going to know that unless you know whether your PPP loan expenses are deductible, right? So, and the challenge that business owners have, and they will continue to have, is if a lot of these decisions are made after the race is finished, as I like to say.
Right. Or even next year, Brian. Or
Yeah.
even next year.
Yeah. And so that of course, then a business owner is not allowed to go back and amend their, I mean, in some cases they are, but I mean, making a business decision that's taxes. So just listen to the podcast I did with Barbara.
It all works together though, Brian, right? It's like,
oh, absolutely. Absolutely. So some of the other expiring regulations, I think there were like 4 or 5 that I wanted to highlight with you. And there are dozens, right? Basically, of things that regulations that Congress will be looking at. One of them, though, is the SEC, the temporary rules on crowdfunding. Where do we stand with that right now?
well, this was fabulous because the Securities and Exchange Commission, they looked at what they could do to make it easier for small businesses to do a regulation crowdfunding raise, basically to go to a platform, put their idea out there. There is some compliance and a little bit of bureaucracy and red tape involved with that. You have to file, a form with the SEC saying, as an issuer, as a small business owner, that you're going to do this.
Right.
And there are some other rules that get in the way of you once you raise the money and actually getting the money. There's a time period involved with that, as well as certain other paperwork that you have to do. So what the SEC did was it streamlined a lot of those rules to make it easier for small businesses to raise money more quickly. And then once they hit their goal, to get that money right away, as opposed to having to wait 28 or 38 days. The other thing that they did was, in terms of the, you have to disclose a lot if you're doing a regulation crowdfunding raise, your financials, your tax returns. And the other piece that they put out there as a temporary measure said that if you're raising up to $250,000, that your financial statements do not have to be looked at, by a financial professional, by an auditor. That essentially you can use your financial statement and your tax returns and certify that these are correct, as opposed to having to use, an outside CPA, to check off on that. Right. And a few other things. So those, they put that in play. It originally expired August 31st, right. But now they're going to allow for businesses to basically raise money up to February 2021 under these new sort of streamlined rules. And we see a huge uptick in crowdfunding because of this. It's really off the charts right now.
And I couldn't agree with their extension more. I mean, what a fantastic option for viable businesses, right? That are looking for investments into their products, their services. Then crowdfunding. That's been one of the best options for small business owners as an alternative to traditional bank loans and private equity and venture capital, right?
Right. And it gets better because on Monday, November 3rd, why is that date right? I know this event is time stamped, but the SEC will soon act on other proposals that they put out there 5 or 6 months ago that will improve crowdfunding even more. It'll lift the cap that you can raise. And this is for Title III crowdfunding, which is, sort of the regulated crowdfunding where right. Ordinary people can invest, non-accredited investors can invest in your business. They're going to raise the cap from 1 to 5 million of the amount that you can raise. So that's really good for many types of businesses. They'll allow issuers of small businesses basically to go on a platform and to socialize their idea before they even issue a form to the SEC to say, what about my idea? Do you think this has merit? Get
Yeah.
feedback from that. So
Yeah.
they can actually talk to investors before they file something with the SEC. And there's other changes too that are going to make this really, really favorable for small businesses and should enhance crowdfunding and supercharge crowdfunding, in fact.
I love that. I love that. All right, so I think we're 2 for 2 so far. PPP is looking pretty good.
These are
right?
money issues, access to capital. Here we go.
Right. Paid leave, so that being paired with tax credits, and payroll tax deferral. That was a big thing for small business owners. How are we looking as we kind of come into the home stretch for 2020 on paid leave, payroll tax deferral, and those expiring regulations?
Sure. Well, on the paid leave front, if you recall, Brian, in the first sort of coronavirus related package that was passed by Congress in late March, it included a mandate that employers with less than 500 workers provide certain paid sick leave to employees impacted by COVID-19. So this impacted small businesses. Now,
Yes.
So we are very upset and concerned about this mandate, particularly given the devastation of COVID-19 and small businesses having no revenue, many of them to speak of during this period.
Right.
And this basically goes to the end of the year, December 31st, 2020. So it will expire, this COVID-related paid leave mandate.
Right.
However, the DOL did put out a rule earlier, said, look, if you're a really small business, and you can show that that COVID-19, the shutdowns, everything that local governments did, state governments, that impacted your business, then you will be exempt from this paid leave mandate. So there is an exemption for small businesses. There's some paperwork involved, but the bottom line is this paid leave mandate does expire at the end of this year, and it will be done unless it gets extended. Okay, but that's another. So this will be done, and that was paired, of course, with a tax credit that essentially offset employment taxes, which are paid quarterly. So with the paid leave mandate, you could essentially use a tax credit and figure out what the tax credit was, and then subtract that from what you would owe on a quarterly basis. So this did help a lot of small businesses that were impacted by this paid leave mandate.
Right.
And that expires, of course, quite, logically at the end of the year as well.
Yeah. And what it tells me, though, and for the people who are listening, is you really need to sit down with your accountant. If we haven't made that clear enough to understand all of these expiring regulations and what they're going to mean for their business. Because in the last 2 months, there's a lot of volatility. I mean, where we are today and where we are at the end of the year could be very, very different in terms of these regulations and what Congress decides to do. What gets Go ahead.
I'm sorry, Brian. One thing I was going to just mention too was, for small businesses to not forget about the employee retention tax credit.
Oh,
I know we'll probably, we could talk about that. Again, a lot of this is on our website, sbecouncil.org. We have a lot of great information where, it was an incentive for employers to keep employees on payroll, that they would get a 50% a tax credit of qualified wages up to a certain, of course it was capped.
Right.
But you could use this, with, the paid leave tax credit. All these things were made to work together. The only thing is, if you did get a PPP loan that, paid for all your employee wages during this period of time, it cannot be claimed, during that period of time that you use that PPP to cover wages. So, and this is another piece that does expire at the end of this year, but I would not overlook this if I was, an employer. It's an incentive to keep, really does help in terms of the bottom line.
Oh, no doubt. If you kept your employees this year to get that tax credit and you didn't get, and that is for, even if you got PPP though, it's, I believe isn't it, you can use it for any wages not covered by PPP, right?
You mean the employee the
Retention credit.
Yes, yes,
Yeah,
yes,
yeah, yeah,
yes.
yeah.
So, yeah, during that period,
Right,
obviously. So,
right,
and also, the business either had to be shut down or materially impacted significantly the revenues as compared to last year, which
right.
most businesses were, right?
Oh my God, yeah,
So,
yeah,
if that's all that you have to pretty much show is that your revenues were impacted in a negative way from COVID-19 as compared to last year, or your business was shut down during a period because of a lot of, the mandates and the shutdown orders that occurred at the state or local level.
right. All right, two more expiring regulations I want to talk about, and one affects a huge part of the small business market, and that's the temporary FDA rules for food providers and restaurants. What are there are something like 10 to 15 million people who work in the restaurant business. I think that was the number that I saw. So this will have a huge impact, right, on food providers and restaurateurs.
Well, you're right, because they essentially, they became takeout ghost kitchens, if you
Yeah,
will,
yeah.
right? I mean, many of them, and there were a lot of issues, Brian, involved with the supply chain of food, and
Yeah,
businesses had to quickly pivot and say, well, our menu is changing this week or tomorrow, based on the type of foods that we were given, our menus have changed. Because the market has changed, because the supply, we don't have this in the supply chain or this ingredient or this
right,
meat. So we have to
right,
switch to chicken as opposed to burgers. And
right,
as you know, there are rules and regulations regarding food menu labeling, and what you put on the menu or what the ingredients are, and caloric and nutrition
hmm
if you are a food manufacturer.
hmm
So it would be very difficult for these very small enterprises, restaurants and food manufacturers, to keep up with constantly changing everything on their website or their labels. So the FDA did provide some latitude and some flexibility,
right.
for small businesses, exempted them from some of these more stringent requirements. And of course, Brian, we know is in the best interest of restaurateurs and small businesses to have the highest quality food, to
hmm
know, who their supplier was, so that their customer would not get sick, or it wasn't bad
Right,
food, or didn't
right.
come from questionable sources. I mean, you're talking, this is like sort of what keeps a business, a restaurant or a food business open, if they have good quality food
Sure.
that their customer can count on, that is not making them sick and comes from a quality source. So
Right.
this was very helpful. I'm not quite sure, Brian, when this expires. I think it expires when the HHS declares that the public emergency is over. So I
Okay.
think they've continued to extend that. So who knows how long we'll be in this public emergency, but of course, I know probably many restaurateurs and food manufacturers are staying in contact with, all their colleagues, and they're watching this very closely of when they may have to pivot and go back to, this more the pre-labeling framework.
Yeah. All right, last one. And this is huge. And this to me, I want to talk to you about the CDC rule on tenant
Oh,
evictions. Um, I think there are 45 million landlords in the US, and about half of them are mom and pop landlords, right? They're small business landlords. And this is the way somebody has a restaurant or a fitness place or a nail salon, that those buildings could be owned by other small business owners. So let's talk about the CDC rule on tenant evictions.
right. And this came out in September as a follow-up to an original rule, put out by the administration, HHS, regarding like federal buildings or homes or
Mhm.
units that were where federal dollars and federal programs were involved. For example,
Right.
Fannie Mac, et cetera. So yeah, this was a CDC order that has been really extends the original deadline to December 31st, 2020,
Mhm.
where it makes it very difficult, for a landlord to evict a rentor. And I think we're talking mostly about individuals. I don't believe we're talking about business enterprises,
Right.
where, for COVID related, if their income has been impacted by COVID related shutdowns, they've been laid off, they've been fired, et cetera,
Right.
that they pretty much can stay in that property, until this deadline, this December 31, 2020, or even beyond. Now, I know a lot of people are saying this is unconstitutional. This is a takings. The Competitive Enterprise Institute said that. We have a lot of members who are impacted by this.
Mhm.
Um, there's a lot of states and localities who have already done this. Like New York is a big state, that has moved forward with its own eviction rules.
Mhm.
So where the states and localities haven't done anything, this CDC rule comes into play. So yes, Brian, this is tough because we're the people on the other end, right, who own those properties. Where are they going to get the money from to pay their mortgages?
Well, and that's kind of like the missing piece in this whole conversation. When you look at the stimulus packages, right, that came down, they focused on small business, they focused on individuals, the $1,200 stimulus check, the $600 a week unemployment, the protecting the tenants from being evicted from their properties. But you really have to feel for the landlords because they're saying, okay, everybody's getting covered except for us. Where's the break? So that really hasn't been addressed, has it? How do we help the landlords? And again, half of whom are small business owners.
Yeah, there was, I mean, in that first HHS where it involved, again, some type of federal financing, right, for
Mhm.
a property, there was a chunk, like $4 or $5 billion that went to the states where you can apply, to get some of this subsidy money to make up, for the lack of rental income that you were getting. But we don't see anything like that right now,
Yeah.
on the CDC piece. And, one of my members was driving through from New York to Florida, and she was showing me the list of 40 properties that she has, 32 of which people have not paid rent. She didn't show me the names, but she showed me the properties. I mean, we're talking, that business being in the hole for like $550,000 right now, because you're talking month over month over month, and there's no end in sight. And we do know that the governor of New York extended that through the end of this year, or maybe even for the first week in January. So yes, I mean, this is really a big problem for the
Yeah.
small landlords. I mean, where do they go for help, right?
Yeah, and that's a big question. And ultimately, what happens is they wind up losing their properties to larger entities who have the resources to come in and buy them. And so now you're going to have fewer
Well,
landlords.
Brian,
Yeah.
they would have to lose that property because they cannot sell that property under some of these eviction rules, right? So if they're like, I want to unload this property, they can't do that. All right. I know
Wow.
definitely under the New York rule, you
Yeah.
can't do that. So you basically flat out have to lose the property in order to be cut loose from it. Now,
Wow.
in one of my members' instances, thankfully, they've got other businesses on the side. They have great relationships with their banks where they're able to sort of refinance a lot of things. They can add
Yeah.
those on, they can extend. But a lot of small landlords do not have that type of leverage,
Yeah.
with banks.
Yeah.
But even so, this is going to hurt this business with multi properties. And again, Brian, I just see this is sort of an issue that's not being talked enough about.
Yeah.
Really, it is a huge issue that's not being addressed.
You know what, and we continue to go down, into this uncharted territory with the pandemic and with these decisions and the impact they're having on small business owners around the country. I mean, we just talked about five different areas, from loan programs to SEC and crowdfunding and FDA and CDC. And what's amazing is that we have a presidential election coming up.
Right.
At the end of the year where Congress is going to have to make decisions on these expiring regulations. And then we're going to have to see what's the fallout, in early 2020 as the administration either continues or changes. It really, so I think the takeaway here is for small business owners, we have to give you a second full-time job. And
Yes.
that is to monitor all of these things that we talked about today and how they relate to your business. I mean, it's not enough to simply say, I'm going to put my head in the sand. I'm going to wait for all of this to blow over. I'll make my decisions, after everything has happened. There are so many forks in the road that you are going to come to, and you're either going to have to make a decision to go left or go right, depending on the situation. So I think what Karen and I are saying to you is that it is imperative to add, let's call it this, play the what if game. What if this happens? What if Congress decides not to allow for tax deductions on that PPP Loan Forgiveness program, right? Where you can deduct the expenses. What if CDC, the rules on tenant evictions get extended or they don't? How do you respond? I think, Karen, and that's where I go back to what I said in the beginning of this show. And you are a small business owner's best champion in Washington. You keep us informed. You tell us what's happening. You tell us how it's going to impact our business. And so if nothing else, for everybody who's watching this show, go to the SBE Council website. It's sbecouncil.org and email them or ask them questions and find out how what's happening right now in Washington is going to affect your business. How did I do, Karen? Did I get it?
It's great advice. You have to be aware.
Yeah.
And make contingency plans. And I think most small businesses have been doing that. They've been able to pivot, and the pivoting is not going to end, unfortunately.
Right.
And
right.
And I know they're working so hard, harder than they ever have probably in their business careers. But yes, we're working here in Washington to do what's right, to do what's fair for small businesses, and we'll continue to do that, Brian.
And for that, Karen, we thank you. So with that, I want to thank everybody who watched our show today, the Small Business Edge webcast. We've been talking to Karen Kerrigan from the Small Business and Entrepreneurship Council. I want to thank Wheeler Financial for giving us the opportunity to have our show today and to share all of this critical information with business owners. So thank you. Have a great day. Finish 2020 strong, and we'll see you on the next webcast of Small Business Edge. Take care, everybody.